Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Scarlet Fu and Sonali Basak here with you, counting you down to the closing bell. And here to help us take you beyond the bell with the global simulcast is Massar and Tim Stenovec. Welcome, of course, to all of our audiences across Bloomberg Television, radio, and YouTube as we parse through the most crucial moments of the trading day. And at one point, Carol, it looked like NVIDIA might erase its gain.
Yeah, that's pretty interesting, right? It was up more than 6% in the trade, and that AI euphoria across the space has really run out of steam. I'm looking at something like the Global X Robotics and AI ETF. It's down about 1.5%. It was up earlier in the day. If you look at C3 AI, it is down about 11%. And then SoundHound AI, it is down about 7.6%. So any of the enthusiasm has definitely run out of steam.
I mean, look at the stocks. It's down more than 3% right now. It's got one company there. In the stocks, Sonali, is higher, is in the green. I'll give you a guess. It's NVIDIA. Yes, there it is.
Just barely.
That's it. That's it. Everything else is lower.
To the point that everyone is making here, can NVIDIA really see so much of a gain here, a continuous gain, when we're seeing everything else lose out? The hope behind the AI rally here is that it would lift more tides in the market, but you're not seeing it turn the S&P or even the stocks in the way you wanted. In fact, you're seeing just the opposite. Now, this could just be a one-day move, right? But let's see what this one day means for investors as they think about their AI bets moving forward.
Right, or it could be a resumption of the previous 3 weeks in which there was a lot of weakness for the big winners, notably the big tech names. And of course, as we head into a seasonally weak period, there's a lot of questions about whether this is just kind of a precursor of what's to come. There you have the closing bells, and it is red across the screen here, and we're pretty much at session lows for the major indexes. The S&P losing ground here by 1.4%. The Dow Industrial is losing 1.1%. The NASDAQ, the big loser of the day in terms of percentage of decline, 1.9% loss, and the Russell 2000 of small cap companies losing about 1.25%.
All right, well, let's get a check on some of the, we're still getting some earnings crossing right now, getting a check of what Intuit is doing in the after hours right now. Having a little trouble pulling it up, but it is a reminder that earnings season is by no means over at this point, guys. We're still getting plenty of companies reporting, including Splunk yesterday and Intuit right now. The company's saying that it sees fourth quarter adjusted earnings per share of $1.65, beating estimates of $1.46. The company's seeing first quarter adjusted EPS of $1.94 to $2. So that's within the range of estimates. That was $1.97. In the after hours, it is not moving. Fourth quarter net revenue coming in at $2.7 billion. That did beat estimates of $2.65 billion. Moving a little lower, unchanged in the after hours, guys.
Yeah, stock is up on the year. It's up about 28%. So again, maybe in this environment, investors expecting a little bit more. Talking about the outlook, 2024 revenue of $15.89 billion to $16.11 billion. The estimate is $15.96 billion. So it does look like it's giving some upside in terms of that range. But again, Sonali, continuing to see that stock just down a hair, down about 0.8% in the after hours.
We're also getting some results from Workday here as well. We are seeing generally them beating estimates, revenue coming in at $1.79 billion, just above estimates. We're also seeing adjusted EPS also coming in above estimates, beating by 20 cents per share or so, 143 a share. The estimate was 126. Now, this was a company that was already up more than 30% on the year. So let's see how investors bite on the results. But a slight beat there across the board.
All right. In the meantime, let me go to my gainers. I'm a little nervous that maybe they didn't hold. So fingers crossed here, everybody, especially as
no hard feelings, Carol, if it didn't work, okay?
Do not judge.
All right, I see a lot of green. You're okay.
This is live
I see all
TV
green.
and live radio. What
You're
can you
okay.
do?
Here we go, everybody. Autodesk. This was actually, when we talk about, what was top in the NASDAQ 100 and the S&P 500, this is the number one gainer in the NASDAQ 100, so definitely above NVIDIA. And if I look at the S&P 500, it's the number 4 gainer, so it's up about 2% here at the close. Earnings last night, we broke them down. Software company reported second quarter results, beat expectations. The company did raise its full year forecast for adjusted earnings and also raised the low end of its full year forecast for billings, free cash flow, and revenue. So investors keeping that stock up with a 2% gain here for the Thursday trade. NVIDIA, let's go go there, way off its highs of the session, still up just about 0.1%. You know the numbers, blockbuster numbers. Everybody was excited, but nonetheless, that enthusiasm running out of steam, despite Morningstar, that lone sell rating on the stock, finally jumping on board and changing that rating, but nonetheless, really running out of steam. Keep in mind, NVIDIA is still, I think, the number one gainer in the S&P 500 by a mile this year. And Splunk, I want to go. You want to look for a tech standout? Check that one out. Yeah, up almost 13% in today's session. It's an infrastructure software company, reported second quarter revenue that beat estimates. It also raised its full year forecast beyond expectations. It hit a 52-week high in today's session. We're going to actually talk to the CEO in the next hour. Has an AI play. It's cybersecurity. So curious to see what he has to say about IT spending right now.
All right. Well, speaking of an AI play, let's get to decliners right now, because there were certainly some within the space, within chip makers. AMD finishing the day down by 7%. The stock's falling more than 3%, 29 of the 30 components in there lower. None more so, though, than AMD falling today. Not necessarily good news for the entire industry, even though NVIDIA had a great quarter. AMD, I should say, is way behind when it comes to developing chips with AI capabilities, the same way that NVIDIA is trying to do. Dollar Tree finishing the day down by close to 13%, 12.9%. Their third quarter earnings forecast fell short of analyst estimates. Handful of challenges that the company is facing: higher wages, a less profitable sales mix, and then, see if this sounds familiar when it comes to retailers that we heard from this week. They mentioned, quote, elevated shrink, which of course includes losses from theft. We've heard that from other companies, including Dick's, Macy's, and more. So add that to the list of companies concerned about theft. Petco, woof. That's the ticker, but also a woof day for the company, down more than 20%
today.
Work
on your bark there, buddy.
You'd be the second person today to make that joke.
Really?
Yeah.
Oh, okay. I guess it says
for today.
I'm in good company then, I guess.
You are.
It did hit a record low, I should note. The new guidance missed the average analyst estimate, the company cutting its adjusted earnings per share forecast for the full fiscal year. Ron Coughlin over at Petco, we've spoken to him quite a bit over the last few years. He's the company's CEO. He said discretionary spending is continuing to be pressured.
Yeah, for sure. And you're looking at investors discern between the winners and the losers for when we do spend, how particular we're becoming to what we spend on. Let's take a look at how yields ended the day. Up across the board as the sell-off continues. The 2-year yield now yielding more than 5%. The 10-year yield 4.25%, or just under 4.25%. You go out to the 30-year, 4.29%. At some point, Carol, you figure that investors are going to start switching into bonds from stocks, because those yields are pretty juicy.
Exactly. I mean, and with less risk, right? So why wouldn't you take something like a 4.5%, or 5% yield? Hey, but let's go back to the equity market, because we do have some earnings, retail earnings continuing to cross the Bloomberg. And Nordstrom just out, second quarter net sales of $3.66 billion, a slight beat. $3.61 billion was what the street was expecting. Second quarter total revenue of $3.77 billion. That too is a slight beat. $3.68 billion, and you are seeing the stock up 7.5% in the after hours, which, if it stays at that level, would double the return for the year. As for the outlook, still sees fiscal year adjusted EPS of $1.80 to $2.20. The estimate is $2.01, and still sees fiscal year revenue -4% to -6%. But again, keep in mind that about 70% of the float of this one has been shorted. So if there's a little bit of a beat, you might have some short covering here.
Yeah, I'm just looking through the release to see if there's any any mention of shrink, because it's been such a prominent theme for a lot of the retailers. Obviously, Nordstrom, a different kind of retailer than Dick's Sporting Goods or Dollar Tree, but no mention of that. But there is a lot about supply chain optimization and inventory productivity. It all comes down to inventory, doesn't it? This idea that you pick out the right mix and you price it the right way, you move it at the right time, so that you're not left with a whole bunch of things that you need to mark down.
Hey, I wonder if that's a job for AI, guys, because that is a difficult thing to do.
Yeah, exactly. But anticipating consumer demands and what they're interested in, it's what's tough for retailers. I will say the beauty retailers for a long time have really been outperformers, but let's get to Ulta Beauty, because they're off about 9% year to date. Company coming out with a forecast and saying fiscal year EPS $25.10 to $25.60. It had seen $24.70 to $25.40. We are seeing the stock down about 0.6% in the after hours. Net sales, fiscal year net net sales, 11.05 billion to 11.15 billion. Had seen 11 billion to 11.1 billion. So the number's really, really close. And Sonali, they're also talking about comp sales, fiscal year comp sales of 4.5% to 5.5%. They had seen 4 to 5%. So I feel like they're kind of close to all of these numbers that are out there.
They are close. They raised their outlook for the full year of 2023, but to the point you're making, not by a whole lot. And for the point there being made about how hard it is to understand where the consumer's headed from here, we know that there's some headwinds. What we don't know is just how hard those headwinds will hit the consumer.
Yeah.
And there seems to be some optimism still in the street. You didn't see it in the market today. You see a little bit of it in the numbers, but again, not enough for really Wall Street to clamp down on hard.
All right, and we do have Marvel just crossing really quickly and pulling it up. They're down about 1.3%. So again, another semi company, if you will. Let's get it out. A semiconductor company. So we're seeing some movement, and we'll continue to break them down. Third quarter adjusted gross margin 60.3% to 61.3. Estimate was for 61.7, so maybe a little bit light. So we'll see how that trades. All right, guys, that's a wrap. Earnings continuing, but again, it's on to Jackson Hole and Jay Powell tomorrow morning, which we'll be talking about certainly in our cross platforms tomorrow. That does it for Beyond the Bell.